For her take on the markets and investment opportunities, we welcome now Wall Street Week contributor Afsaneh Beschloss, founder and CEO of RockCreek. Afsaneh, always a pleasure to have you with us. So we had a record S&P 500 and Russell this week. There's a lot of news out there, including about a vaccine. But how much of this was really because the interest rates are close to zero?
Obviously, David, a lot of it did have to do with the interest rates being at the levels they are. But we can't forget the fact that a very major thing also happened, and that was the removal of uncertainty and the fact that markets and people realized that the election results were final in the U.S., or they will be final soon, but that President-elect Biden will be taking over. And I think that certainty and the fact that he and his administration would bring more certainty to markets was huge. The other thing, obviously, was the news on the vaccine. So you put together interest rates, certainty, or more certainty, and vaccines. That's a pretty potent mixture.
Yeah, there was some uncertainty inserted as well, including by the Trump administration, albeit on the way out, as they announced that you couldn't invest in certain specified Chinese stocks because they said they were associated with the Red Army. What about that? What about possible uncertainty over the next couple of months? Because we're not sure exactly what the Trump administration might do.
You know, it's interesting because the news just came out from nowhere yesterday, as you mentioned, and there had been some conversations about limitations on U.S. investors in buying the equities in China that are related to the government, in particular defense industry. But the timing of this was interesting. Some people even said it was related to maybe knowing that President Xi was about to congratulate President-elect Biden. But as you said, there's going to be a lot of things like this between now and January. The main thing, though, which was very interesting, the majority of these stocks are held by non-U.S. investors in any case. So it's not like it's going to impact prices too much. U.S. investors obviously were scrambling a little bit in terms of, the fact that some of them might have a very tiny amount of allocation to some of these stocks. But then if you read the fine print, Treasury has said that you can dispose of these stocks until almost the end of November or middle of November of next year, so a year from yesterday. So it's one of those things, as we've seen with TikTok, which went back and forth, and at this very moment is sitting in sort of limbo land. We don't know really what will happen with these particular stocks, but it was not anything that was major for the market.
So, Afsaneh, throughout this tumultuous year, you have come on Wall Street Week and you have talked about ESG stocks, a basket that you follow, environmental, social, and governance. Are they still holding up the way they were in an uncertain world?
Absolutely. And I think what is really interesting is that as our lifestyle has changed, even, as you mentioned, the changes in the market where we had value stocks have their biggest day in a very long time. Also, recently, during that same period, two things have happened. One is that investors themselves are trying to look longer term and starting to value things beyond capital and labor. They're starting to look at carbon as a risk for a company, and they're starting to measure it even if there's no carbon tax. The second thing that has happened is the opportunity set, and COVID just expanded the opportunity set or brought it forward much faster. So things like what you just had, for example, Anne Finucane talk about, which was fascinating in terms of their very big bond issue, I think is going to be really, really consequential. And we're going to have a lot more of both equity market and bond market developments in ESG.
As you compare ESG baskets with others, are they holding up well? In the past, you've reported that they actually are beating others on return. Is that still the case now?
Absolutely. They continue to both beat the non-ESG stocks, if you want to call them that. And secondly, they are expanding. So you're seeing, continuing to see not just in the first quarter and the second quarter of this year, but also in the third quarter. And as we speak, more assets go into these. And it was the ETFs and some of these mutual funds that started the trend. But as we're talking, a lot more money is going into private areas, private equity, venture, and also other private areas like in real estate and infrastructure, of course, which is a huge growth area that is taking on ESG assets. So you're seeing it both in performance and asset flows. And by the way, the other thing to mention, David, is that these assets, particularly if you're going to climate-related and energy-related, are huge creators of jobs. So it's not just a question of climate change, which obviously everyone cares about, but it is also about creating the future jobs. And by counts that you see at WRI, I swear 63 million jobs by 2050.